Title: Understanding the Capital Asset Pricing Model, CAPM. Introduction. Welcome to this comprehensive masterclass on the Capital Asset Pricing Model, CAPM. In this in-depth session, we will explore the concepts, principles, and applications of CAPM in investment analysis and portfolio management. Join us as we delve into the underlying theory, assumptions, calculations, and interpretations of CAPM, and discover how it can help investors estimate the expected return and risk of individual assets and construct well-diversified portfolios. Section 1. Introduction to CAPM. 1.1 Overview of CAPM. Understanding the purpose and significance of CAPM in finance, exploring the relationship between risk and return. 1.2 Key Assumptions of CAPM. Assumptions about investor behavior and market efficiency, implications of these assumptions for CAPM's application. Section 2, the risk-return trade-off. 2.1 Risk and return concepts, defining and measuring risk and return in the context of CAPM, understanding the different types of risk, including systematic and unsystematic risk. 2.2 The capital market line, CML, exploring the CML as a representation of the risk-return trade-off in the market, understanding the role of the risk-free rate and market risk premium in determining expected returns. Section 3, Beta and Systematic Risk. 3.1 Understanding beta, defining beta as a measure of systematic risk, calculating beta and interpreting its meaning. 3.2 Estimating beta, methods for estimating beta, including historical regression analysis and industry benchmarks, considerations for selecting an appropriate time period and benchmark for beta estimation. Section 4. The CAPM equation and interpretation. 4.1 The CAPM equation, understanding the CAPM equation and its components, expected return, risk-free rate, market risk premium, and beta, calculating the expected return of an asset using the CAPM equation. 4.2 Interpreting CAPM results. Assessing the relationship between a stock's expected return and its beta, understanding how CAPM helps identify overvalued or undervalued assets. Section 5. CAPM in Portfolio Management. 5.1 Portfolio Construction using CAPM. Incorporating CAPM into portfolio construction and asset allocation decisions, understanding the role of beta and expected returns in portfolio diversification. 5.2 Evaluating investment opportunities, assessing investment opportunities based on their expected returns and risk levels using CAPM. Comparing investment options and selecting assets for a well-diversified portfolio. Section 6, Limitations and Extensions of CAPM. 6.1 Limitations of CAPM, exploring the assumptions and limitations of CAPM, including the single-factor model and its sensitivity to market conditions, recognizing other factors that may impact asset returns, example, liquidity, size, and value. 6.2 Extensions of CAPM. Overview of multi-factor models and their application in asset pricing, considering alternative models that account for additional risk factors. Conclusion. Congratulations on completing this comprehensive masterclass on the Capital Asset Pricing Model, CAPM. By understanding the underlying theory, assumptions, calculations, and interpretations of CAPM, you are now equipped to estimate expected returns, assess risk levels, and construct well-diversified portfolios. Remember that CAPM is a valuable tool, but it has limitations and should be used in conjunction with other models and factors when making investment decisions. Continuously evaluate and update your portfolio based on changing market conditions and new information. With a thorough understanding of CAPM, you can make informed investment choices, manage risk effectively, and optimize your investment returns. Best of luck in your journey as a knowledgeable investor.